Hi everyone, my name is Shapour, and today here I have a very special guest with me. She's Jane Slack-Smith. She's a property market commentator. She's a very well-known educator in property market. She's an author. She's a podcaster. You can see tens of podcasts on the internet by her, and she's been awarded Australia's Mortgage Broker of the Year twice. She's a co-creator of the Ultimate Guide to Renovation, and so on and so forth. Hi, Jane. Thanks so much for being with us today.
Oh, it's a pleasure. Thank you so much for inviting me.
Thank you. Just for my audience to know, I called Jane today and requested to spare some time for the interview and did not actually give her time to say no. So that's how I do interviews. Thanks so much, Jane.
I think it's easier to ask for forgiveness than permission half the time, isn't it?
Of course. I will ask later on, okay? Jane started her career as an explosives engineer decades ago. And when I was thinking of what kind of person would be an explosive engineer, and then I'm specialized in explosives, and then get into the property market, I was trying to profile such a person. I came up with the idea that, okay, that person should know risk very well, and they should also know, apart from the fact that risk exists, they should also know ways to tackle risk. I know in the property market, a lot of people are afraid to get into the market. So do you have anything to tell us with regards to risk management and risk when it comes to property investment and renovations?
Well, Shapour, you've nailed it exactly. Risk assessment and bringing those skills to my property investing journey were really important to me because, to be quite frank, I was a bit of a scaredy cat when it came to property investing. And my now husband, but boyfriend back, 22 years ago had said to me, hey, I've got a property in New Zealand where he was from, and he had started a lawn mowing business, and he was mowing the lawn for this guy. And this guy said, you did such a good job. I've got 3 other properties. He said, you're 25 years old. How do you have so many properties? And he said, the first one's the hardest. And, he really kind of inspired my husband, and my husband came and said, we should invest in property. And my boss had kept saying to me, if you get a property and have a mortgage, I know you're tied to me forever. So quick, go buy a property. So I was, footloose, fancy free, 28 going, I'm not going to buy a property. And then, I thought, and I looked at, the share market, and on a whim, things changed and I couldn't really predict it. And being an engineer, I'd spreadsheet things, I'd do analysis, I'd do due diligence on everything. And to your point, as an explosives engineer, I would every single day was looking at the likelihood of something going wrong and the consequence. And based on that, then coming up with an action, which might be, we can't do it, or, hey, if I put these actions in place, I can do it. So I brought that skill set to property investing, and I thought, if I can look at the risks and then look at the consequence of those risks, I could accept them or I could move on. And how do I work out how to de-risk investing? And so essentially I looked at the 16,500 suburbs in Australia. Wow. I looked over 20 years, the ones that had outperformed the others. I looked at characteristics that those suburbs had, and that narrowed it right down to like 1,000. And then I thought, if I have an investment property, how can I de-risk that there's not going to be a vacancy? So why don't I go into an area that has 30% renters, which is the general rental number across Australia? So I first of all then filtered off the suburbs that had less than 30%. And then I thought, well, I don't want to have an oversupply of properties, so I want to have more properties that are like more people looking for properties than properties in the market. So I wanted a vacancy rate less than 3%. So I just kept going down and down and down and down to the price point I could afford, came up with 3 suburbs and got to know those suburbs very, very well. And bought a property, my first property for $425,000, and with a renovation potential, renovated strategically and fit for the market, on budget, very, very strategic renovation, and had that property revalued 9 months later at $700,000. So yeah, I brought risk to the property investing space.
Beautiful. Jay, when I asked this question, I was thinking of what kind of answer I would receive, and I'm very happy that I did not receive pep talk. I received strategies, I received procedures. Beautiful. Thank you very much. Just for that part of the audience who might not know, Jane wrote her book, Your Property Success with Renovation, back in 2012, if I'm not mistaken, right?
And like 10 years ago, right?
Yeah, 10 years ago. And I had the privilege of reading that book very, very shortly after it was published. So we have the book here. Yeah, and the cover design is so beautiful, so appealing to the reader.
Well, I designed the cover, but it's actually still in print and a bestseller. It just keeps getting me printed, and it's great. The information is timeless, and that's one of the things I found about property investing and renovation. If you get it right, it's to Warren Buffett, he says if you're doing it and it's exciting, you're probably doing it wrong. And the editor of Money magazine used to ring me up and say, Jane, I need your boring meat and potato strategies, because they're boring, but they just always work.
Always work. That's beautiful. A lot of people, after they see these beautiful scenes on the TV screen, okay, in flip houses programs, they decide that, okay, they need to buy a property to flip. And as soon as they see this rundown property, they mistakenly think that this is the ideal opportunity for a renovation. So my question is, could you possibly elaborate on the idea of renovators trap a bit for us?
Sure. And that's so accurate, Shapour. The thing is that not every property that is run down or in need of a renovation deserves a renovation or can be renovated profitably. And if you're in the business of property investment to grow wealth and grow equity and have long-term tenants and put the rent up, then you want to have a renovation that achieves that for you. But where it starts is with the right property, and where that property has to be is in the right suburb. So one of the things that I do and teach in that Ultimate Guide to Renovation course, and in the book specifically, is understanding pricing disparity. So within a suburb, you have to have the proof of the renovated properties to be and big enough or high enough above what you're buying the unrenovated property for to make money. So for instance, if you're buying for $400,000 and it's going to cost you, let's say a 10% cosmetic kind of renovation, $40,000, and it's cost you $20,000 for stamp duty and $10,000 for holding costs, etc. We're getting up to like $470,000, $480,000, and if you are only finding proof of renovated properties at $500,000, there's only like a $20,000 profit in there. Whereas what I teach is I want you to have at least $2 for every $1 you spend. So if you are buying a $400,000 property and you spend $40,000 in renovation, I want you to make $40,000 on the profit, and then put on that $30,000 on top of that, the cost. So that gets us to like $530,000. So if you can't find within a suburb the unrenovated properties for $400,000 and the renovated at $530,000, or as those numbers move up, $600,000 and $780,000, etc., then maybe there's not capacity in that suburb to even start spending your time. But when you do then find the suburb that you want to concentrate that renovation strategy in, you then need to actually find the right property. So there's no point in going, wow, this is fantastic. We've got the pricing disparity, and you then go and buy a 2-bedroom house on 400 square meters, where the typical property is actually a 3-bedroom house on 600 square meters, because you're already behind the curve to start with. And then finding a property that has a lot of structural issues. So you have to, put up a retaining wall or replace the roof, or, do water treatment or whatever. That's not going to add a higher and better value to the property. It's just everyone expects a property to be, structurally sound. So you might have wasted $40,000, $50,000 just getting the unseen things done.
Exactly.
So, the traps people make is they buy in the wrong suburb without pricing disparity. They buy the wrong property, and then they get into the renovation and they may overcapitalize. So they're like, I always wanted to have Caesar stone bench tops at home, so I'll do it. But they're in, Western Sydney, where, a really nice Caesar stone look Laminex is fine and it's going to cost you $2,000 less.
Definitely.
Or they might go, oh, you know what, I'm going to save some money and I'm going to do all the renovations myself on the weekend. And it'll take like 2 years of not having, the rental capacity coming in, as opposed to getting professionals in for 6 weeks. Or the budget blows out and you start going, and you know, I have been, this did happen to me. You know, I was walking through one of my houses that I'd been renovating, and the electrician said to me, "Did you want dimmer switches?" And I was like, "Oh yeah, that sounds like a good idea." You know, normal switch, $5, dimmer switch, $12. All of a sudden, all the switches throughout the house had dimmers on it, and it doubled the cost, right? I just hadn't thought about it. So it's like budgeting, being on budget, and being, you know, and keeping to the time frame are also some of the traps that people run into.
They're as important. You're right. So as for renovation, to give our viewers some value with regards to the renovation projects they might have in the future, I remember about this time last year, I created this podcast under the title of How to Buy Several Properties in a Short Time. And there I told people to have several strategies, multiple strategies instead of one single one, okay? And that reminds me of your Trident strategy with renovations, because a lot of people have learned this terminology from you, and I know a lot of people have in ways misunderstood it. So I would like to hear from yourself, what is your Trident strategy with renovation projects?
First, let me tell you a funny story, Shapour. I had someone recently ring me, and they said, as a mortgage client and as a discovery call, and they said, "Look, you may not fully understand this, but I am a student of the Trident strategy. Let me explain it to you because I want to do it." I was like, "Oh, okay, tell me all about it." And so I'm so glad that it's now become almost mainstream as a strategy type.
It's become a college.
Well, here's the thing. A lot of people depend on the hope strategy. I hope this property will go up in value. I hope this property will give me an income. I hope someone will rent it. I hope someone will buy it one day. And hope's not a strategy you can pin your future wealth on. And so what I love about what you're saying there about having almost like a multiple strategy is really plays into my my risk assessment, because I was a scaredy cat and I thought, if I really get this wrong, how can I have a plan B and maybe even a plan C to get it right? Yep. And so I have 3 ways of making money on a property. And the first way is actually the research. Do the research, know the suburb, know the price point, know the motivations if you can find out of why people are selling the property. Understand how to negotiate. It's not I'll give you $520,000 and you can tell me yes or no by Monday. It's I'll give you $520,000 or I'll give you $540,000 and pay you in 6 months. It's like an either or. So they're not going to a yes or no. So that first part is about how to buy below the market. Know the market, know how to negotiate. Now, if there was any one of the strategies that I'd give up, it would be that one. Fast moving market, you know, 600,000 this week is 650 next week. And, you know, you need to be able to understand that, but you can still negotiate. And I had a lot of my mentoring students over the last 2 years where we've had phenomenal growth and no one can buy in Brisbane. It's impossible to buy in Hobart. They're in there and they're actually doing deals. So there's people who, for whatever the terms that we provided were acceptable to them, and they were buying less than what other offers were on the table. So I know that's possible. And then the second strategy, so you're making money straight up. You know, if you're thinking you're buying at $400,000, for instance, and you're able to buy it at $360,000, that's 10%. 40,000 is 10% growth. In a real world, not 2020, 21, that's like, you know, 2 years worth of growth. You're ahead of the curve. So I love that. And then,
and apart from that, sorry to interrupt, when you buy on the market value, even if at some stage worse comes to worse and you decide not to proceed with your renovations, you'll have already made some money. Okay, that's a very important point.
Exactly, and which allows you to hold it potentially for a little bit further, or if the market does come down, you're not losing out.
Exactly.
And then making money in the midterm, and that's where I use renovation. So that's getting in. So, you know, I bought that $450,000 or $425,000 property, and with a $50,000 renovation made it $700,000. So I made equity, created it out of thin air, strategic renovation, fit for the market, fit for the demographic, on budget, on time. And what's beautiful about that is I always renovate just a bit above the typical property in the area so that people want to stay there. So my vacancies are very small, or if they are properties vacant, it's for a short period of time. But most of my tenants, I mean, I've currently got tenants that have been there for 9 years in one of my properties. Excellent. So they don't move out, and I can charge a bit more. So that's my second part of the Trident strategy. And then the third part. And obviously being able to charge a bit more for rent is always great because it's the cash flow that helps you hold the property for the 10, 15, 20 years. But it's the third part of the strategy that helps you get out, and that's the growth. So, you know, that $425,000 property now is worth $2 million. You know, so, you know, it's the growth that will give you the retirement that you want. And being able to target growth, I've got a couple of ways that I do that. I look at the ripple effect. So I look at, you know, when people can't afford one area, they move into the next area. So anticipating that next area. So I use a dot map technique, as you would know, that allows people to do that. And then I also, I look at the, you know, some population movements. I'm very excited when the 2021 census data's come out. You know, I'm looking at that and looking what people are after. I'm looking at how do some of these strange things like, you know, work from home affect the type of properties, what people are looking for in the properties they want. And so I'm looking where there's growth potential as well. So that's 3 ways of making money with a property: buy below the market, renovate to add value, and growth to get you to your wealth goals.
Definitely. Well put. And what sounds most appealing to me with regards to this Trident strategy is that it's absolutely opposed to the old-fashioned idea of buy and hold. Buy and hold, which is still unluckily advised by a lot of advisors to potential investors, is a rotten strategy, I think, because it sort of prevents you from having something like the Trident strategy. So, well,
to the point, like the major part of the wealth that I see people make is from that capital growth, which is the hold. So it allows people to, it's not like a one and done, buy and hold, set and forget and move on. And maybe in 10 years time, there's enough money to pull it out to do the second one. It's more like an active buy and hold strategy. So you buy, create equity that you can pull out and do the next one, whilst this one keeps going up in value and giving you that long-term plan.
Definitely. Thank you very much. I have a question regarding mindset and mentality. Sure. I was thinking because you are really well-known success guru. So I was thinking of requesting you for another perhaps interview to have a chat about mentality of success and mindset in the property market, because I've heard you talk about the mindset of abundance as opposed to the mindset of lack. So if we can briefly have a touch upon this one, that would be much appreciated.
I just correct you. I'm not the sage on the stage or the guru. I'm someone who's on the path of learning as well. So I definitely don't know it all and packed up my books and gone home. I'm learning every day. And I think that's one of the characteristics that I've found with those that are successful. And having sold thousands of courses to, you know, thousands of property investors, and, you know, for the last 9 years, I've monthly been running a Q&A call for my, you know, my club. And so I get to hear the questions and I'm responding, you know, in helping people. And I guess one of the things that really struck me is some people are successful, even though, you know, they've bought the courses and the books, they're successful. And some people who've done the same thing aren't. And it fascinates me, and it has been a study of mine for the last 5 years to really go deep in, well, how can I help people be successful despite themselves, right? How can I almost guarantee success, which would be my, you know, absolute goal for people to have that wealth, financial abundance, so that they can get on with life and live their true purpose and passions and not be wage slaves and have more time talking to their kids. And so what I've found is that the mindset, it's an amazing thing. And we all come from the traditions and the different countries and that we've come from. And we've been told things like, you know, it's rich people have got their money through bad ways, or we've been told that, rich people are bad, or, it's better to be poor and happy than, rich and sad. And so there's all these stories that we have, and a lot of them from our childhood. And so I've really been looking into that mindset piece, and I'd love to talk to you more about it. But what I have found is that the people who are successful are very, very clear on the vision that they have, emotionally connected to the vision, and they understand there's action to get there from their current reality. But they're also, they have a higher and greater passion, to have their financial freedom, to have more time with their family, or to be able to contribute to the community, create a legacy or an impact. So often it's more than just them making money and have a Ferrari, is what I have found. So I've kind of doubled down into this, and recently just started Your Success Club to help people kind of look at some of these limiting beliefs and mind blocks. Because, I mean, as you know, there's people we talk to who have said for the last 15 years that they want to buy property, but they just don't know when, and they just don't know how. And I think it's the how is there. Like, you read the book, you did the course, the how is there. And I've got like 120 books on property, so I know the how's there. I think it's the understanding of yourself and that competence and confidence that you get. And some of that is just actually identifying some of the things that are limiting you and holding you back. And I really enjoy playing in that space and helping people work through those kind of realizations so they can then get on and do what they really want.
Definitely. I hope I'll have the privilege of having you for a chat in this realm as well. So as for capitalization, I think you just touched upon the budget that we spend on the project. And it happens to the majority of potential renovators, when they get into the job, they tend to overrun the budget. So is there any way to avoid this?
Look, knowing upfront how much you have to spend on the property, and that comes back to understanding that pricing disparity or pricing difference between the renovated and the unrenovated properties is important. Understanding the costs and the work involved also helps. And there's different types of renovation. So we talk about the repair, refresh, rejuvenate, revamp, restructure, and all of these are kind of different amount of effort and money. So when we talk about the repair, sometimes that's just, putting on some kitchen doors that have fallen off, cleaning the landscaping up, and, just making it look a bit better. And that doesn't cost a lot, more elbow grease than dollars. And then we have the refresh, and the refreshes might be a paint, for instance, new carpet, nothing significant. We're talking in and out within the week. And then we have the rejuvenation, and that's really like the new kitchen, the new bathroom, paint throughout. The revamp, restructure actually is probably the next big thing that your listeners be interested in. And that's really that major structural renovation, which usually means you have to go to council, get approval, knock off the back, put on the butler's pantry with a big kitchen and a living space. And that takes a lot of time. And what we've seen in 2022 in particular, we've got timber supplies have been limited. We've got the cost of timber going up 15%. We've got the cost of steel going up 42%. So there's a lot of costs that can be associated with those type of bigger works as well. Bigger timeframes, bigger costs, bigger profit, but you need to make sure you've got that pricing disparity. So usually for those major structural renovations, you're not doing those unless, you're starting with a price point around 800,000. Mm-hmm. And a lot of people do those structural renovations for flipping the property. So they need to be able to create a lot of money. But when you've got a property price here and you're doing the renovation to get it up to this price, and then you've got the underlying value of capital growth bringing it down in this type of market we're seeing at the moment, sometimes the renovation and all that time and effort just keeps you on par. And the problem with that is that if you are flipping a property, your target market is owner occupiers, your mums and dads with kids. Mm-hmm. If you're an investor and you're doing a cosmetic renovation, refresh, revamp, repair, rejuvenate, usually you're holding the property, but that's for investors. Mm-hmm. And they live in different streets, and census tells us which streets the owner occupiers are in and which streets the investors are in. So the mistake people make is, look, I'll buy the property and I'll work out if I'm going to flip it or not. But the problem is if they're in the wrong street, they've bought a property in the street where the owner occupiers want to live, and then they're like, oh, I'm going to have to rent it out. The renters don't want to be that far away from the train station, and often you then have a property you can't rent either. So overcapitalization can be, the 10,000 foot view in getting it so wrong with the strategy that you have, but also all the way down to the luxe look, that you might want for the bathroom and kitchen that's not necessary for the demographic and the area.
What you just mentioned about structural renovation leads me to my next point for discussion, and that is the what of renovations. We know some of the items we tend to renovate would be low return items, while some others would be high return items, of course. Most people, again, tend to spend too much on low return items. In these areas, when you spend too much on them, your money is gone with the wind, I think. But with high return items, everyone knows there will be some good return on your investment. Can we have examples of these different categories, please?
Well, there's probably something even worse, Shapour, and that's no return items.
Yep.
And so they're like you buy the property and the electrician comes in and says, this switchboard hasn't been updated. We have to go and spend $5,000 for the switchboard. No one sees that. They wouldn't expect you've got safe electricity, right? So that's like a no return. A low return item could be something as simple as, it's a nice to have. So it might be built-in wardrobes, for instance. It's the 5%er that is at the top where people are walking through going, oh, and it's got walk-in wardrobes. It's not the wow factor of the high return items, which is, the beautiful kitchen or the bathroom, and, you can really get a luxe look for less for some of those items. So for instance, you can have like the motel look tiles all the way to the ceiling, which gives a luxe look in the bathroom, but it's only like $25 a square meter tiles. Like we're not talking, the marble $80 a square meter tile. So you're getting some nice looks that allow you to actually have that kind of wow factor when people walk in and go, oh darling, I have to rent this place because I love the kitchen. And you're like, great.
Now, regarding the composition of the people living in the target area, how do you deal with demographics in deciding what kind of renovation to proceed with, what level of renovation to do, and how does demographics affect this whole process?
What's really exciting at the moment is, we do this census every 4 years, and from the census gives us an idea of who lives where and how they live. And, when we're right at the end of the census period and we're making assumptions about who's in these suburbs and who's going to buy or rent our houses, it's kind of like a bit of a long bow. So we're really in a very fortunate position, being in 2022 now with the new information coming out. And boy, it's a doozy. It gives us an idea that, a lot of these old established areas that were main properties were houses. In the last 4 years, there's been a huge amount of townhouses that have become acceptable. So there's almost that infill status that we can pick up in suburbs as well. But demographics is something that really excites me, and I spend a lot of time looking at them because I want to know who's in the area, and being, agnostic geographically with my investing, because I want to have my property investments distributed over different markets so they don't all go up and go down at once. I'm always looking at markets that I can't physically be at, and to get to know the market quite quickly, there's great websites like Walk Score, and some of the local websites that tell you, where's the nice place to live or rent within a suburb. But the demographics, I can look at that very quickly, and I can read, what ethnicity people are that are coming to that area. Some of the assumptions that you made about, what that might demand. So, the bigger houses for the extended families, for instance. It might be something about mum, dad and kids. If there's a lot of primary school kids, you want to be close to the school. So it's walking distance, but not too close, because if you're between 0 and 100 metres, the property prices go down within primary schools. 100 to 500 metres, sweet spot. So I kind of always looking at how the price correlation works with demographics. If it's, near universities and hospitals, for instance, where most of my investment properties are, because I want to have an on-call, influx of renters, a lot of it is share housing. So therefore it might have, 2 bathrooms, for instance. So I'm always looking at the demographics and saying, what does my market want? And I'm also, when I'm looking for properties, I'm looking for every 10 properties I look and inspect to buy, I'll also inspect one property for rent, because I want to hear what the people are saying. It's like, darling, it doesn't have the security or the fence for the dog, or I can't see the kids in the backyard from the kitchen window, or I would like to have foxtel, or there's no walk-in wardrobes. So I'm listening to what they want, and I'm making my assumptions when I'm assessing the properties to buy to go, well, how much is it going to cost me to add this to that property?
Exactly. What you just mentioned about demographics rings a bell. A friend of mine, this developer friend of mine, built a townhouse in the east of Melbourne, where he decided to have a special facade design due to the fact that a specific ethnic group lives in the area and that they would possibly like that type of facade. But unluckily, what he miscalculated, I think, was the fact that the target ethnic group formed the renters section in the area. They rented properties in the area. They did not buy properties there. So it took him 6 long months in a hot market to finally sell the property, not for the price he was happy with, which was a huge loss on investment, I think.
Well, so, I tell you a little hint that not many people know, and this is something that if you're buying in regional towns can help as well, is go to the local newsagents and look at the magazines that are there. So they might be magazines about, aeroplanes or guns or, art or craft or boats, and it gives you an idea about what the people in the area are actually, their interests are.
So what their tastes are,
yeah.
Likes and dislikes, yeah.
So a lot of a bit of an assumption that you can make. They're all assumptions. They're all working assumptions that we add into our toolbox to come up with a theory. But it's just another. It's not. I wouldn't make an entire property purchase on it, but it just allows you to get to know the demographic a little bit better.
Is doing renovations limited to booming markets like, let's say, last year? Or people can also find good opportunities in softening markets like that of now as well? Because a lot of clients refer to me and say, the market is softening, everything is easing. Should we wait or should we buy to renovate? So what's your view on this?
Oh, gosh, Shapour, such a good question, because on one hand, there is so much confusion and worry and concern, and interest rates are going up, and there's distribution and supply issues, and there's all of these concerns. And having invested over the last 4 property cycles, I've always just invested when I had the money and I bought the best possible property I can. And in a falling market, it means I'm buying a property that is better than the one I couldn't afford last year, right? So I'm always looking for the right property. And you could say, I could buy an $850,000 property today that's only going to be worth $800,000 next year, in Melbourne, for instance. But the reality is the property that you may want that would allow you to create the renovation or the rejuvenation that you want to be able to add equity may not come up next year. Mm-hmm. And what we're seeing at the moment is that there is supply, but there's not so many buyers. So there is opportunity. Now, when it comes to renovation, one of the fallacies around renovation is that as soon as you buy a property with a renovation strategy, you got to go renovate it. And the reality is you don't. You can wait 2, 3. I waited 6 years until I could afford a renovation on my second property. So, for me, it's around understanding that renovation gives you the opportunity to create a new buying demographic. So, people who want the renovated property and or want the unrenovated property, but it allows you to actually not have to renovate straight away. So I have some opinions about the market and where it is at the moment, and they're contentious and they're against, I think, pretty much every other property expert. But as you know, as an engineer and a bit of a researcher, I try to find information where information's not readily available. And one of the things that I've seen that's of interest, we're expecting 180 to 240,000 immigrants to come to Australia in the next year. Now, if we're conservative, that's 40 to 50,000 households. We know we don't have that many empty properties at the moment, so expect rents to go up. rents go up, yields go up, property prices go down, rents go up higher. The people in the stock market start getting all stressed going, I should put my money in bricks and mortar. They come back into the market. And what happens in 12 to 18 months' time is the people who turned up here as immigrants, let's say 10% of them want to buy their own home and they start buying their home, they're going to start putting the market up. So what we're going to have, if we do have, some kind of stability and we have the 10 to 15%, reduction that some of the experts are talking about in the market, I don't think it's going to last for long. I think, we're probably on a 12 to 18 month decline and then ramp that up. And I think immigration is going to be one answer to that. But we're also going to have the cost of building, and the new supply pipeline coming on is already limited as well. So we're not going to have homes for these people to go to. So I'm actually, I'm all for the fact that yes, there's some sentiment that is driving the market at the moment, but we had 2 years, the most amazing growth ever, where we had the assumption that we needed an immigration to push the property market up. And it happened because people decided to trade in their home and trade up. So I'm really, I'm not all, fairies and unicorns all the time. It's not always a pretty place and optimism, but I'm actually quite optimistic about the future. And I think if people can find a property that they can negotiate well in this market on, and have one with a renovation strategy that they can put the renovation in place when it suits them, they can probably get a much higher rent. I've had rents go up by 20% in the last couple of months with some of my properties without me even pushing it. It's just the market has dictated it, and there's almost a bidding war for it. So I think that for those who are very strategic and have got the buffers in place to allow them to be able to see a rate rise of another 1.5%. And bear in mind, the lenders are already putting a 3% on top of what they think you can borrow. So they've already worked that out. Have a bit of cash put aside just in case. But, you have all those risk mitigation things in place. I really think at the moment, it's a really, really good time to buy.
Sure. Jane, thanks so much for your presence and insights. Today, I've honestly found your answers here sufficient proof why people in Australia have dubbed you the Queen of Renovations. Thanks indeed.
Well, I look forward to your next impromptu call.
Sure, I'll just give you the trouble. Thank you.
All the best.